live stream trading. In this live stream I will recap my trades that I have taken previous week, plus I will also read you out my journal about the trades that I have taken, plus we will look at our journal and that we mentioned in our blog, plus I will be noticing my mistakes or mistakes that I have made previous weeks, the patterns that I have missed, and if I have won the trade, why I have won those trades. So these are the things that we will discuss in this live stream. It will be a very short live stream, so we will see how it goes. So let's go look at GBP JPY trades first, starting from the week. So basically, our trading week started from here on 4th of July. On 4th of July, there was bank's holiday in the USA, so we weren't expecting any volume. So that's why I didn't trade it on 4th of July. However, if we look back and see if we have any patterns on 4th of July. So this was 4th of July on hourly time frame. So all right, this was the zone market was creating, and I was anticipating buys above this 163.800 area in GBP JPY. If we look at smaller time frame, this trade was valid as per our pattern one, but due to low volume, I sort of stayed away from this trade. Plus, this trade was formed very early before London Open. That's why the only reason for avoiding this trade was because this trade appeared before London Open. That's why I was anticipating that we may not move up because we are way too early. So that's my whole reason that I have avoided this trade. So on you, this is what I have written on my journal on U.S. National Independence Day. I like stayed in front of charts for more than 4 hours, and my pattern do appeared, but the only reason to avoid this trade was because of low volume, and I have shown basically a strict discipline to only follow my plan and follow my trades, and my trades and my trading patterns are valid only on high volume days. So this was my only reasons to avoid GJ buy trades, else it was an excellent buy trade for almost 30 pips by placing my stops around 20 pips. And if we look at gold on 4th of July, gold basically consolidated on 4th of July. So yeah, so this was basically a no trades in a zone. I basically created these zones. We basically faked below. I was anticipating we may be able to get pattern 1 above 1813, but that didn't happen. So my trading day was over with no trades. And if we look at 5th of July, so let's go to GBP JPY and let's look at 5th of July. Alright, on 5th of July, I was basically anticipating shorts below this area, 164.800 area, and buys above 165.200 area above this zone. But this was our pattern one, but the only reason that I have avoided this trade was because this wick didn't fake up up above these areas, so that's my only reason to avoid this trade, else it was excellent pattern one. And if now I can go back in time, I will still not take that trade, because taking trades and making money is not sort of what I am focusing on. My only focus at this point is to be a disciplined and consistent trader. So if I wanted to be a disciplined and consistent trader, I will only take trades that fit my criteria, and this is not a valid pattern one trade. So that's my whole only reason to stay away from this trade. And later on the day, below this zone, I was anticipating some sort of continuing moving down. We do continued moving down, but the the things I was looking for wasn't there, so I stayed away from GBP JPY. GBP JPY dropped like 300 pips on that day, but I am totally okay with that, because this trade wasn't as per my plan and as per my trading system. In gold, this is the day on which we have seen our pattern one for first time, and it was an excellent thing, because I was anticipating trend is bullish in H4. If we look at H4, we basically we were dropping. Uh, we went up on Fridays, and on Monday we consolidating. So I was basically anticipating a down move, but wasn't anticipating such a big down move. It was around 300 pips of down move, and I stayed away from this trade because at that time I wasn't aware of our pattern 4. If you wanted to look what pattern 4 looks like, you can basically look at this, where I have defined and explained my pattern 4. So if I look at, so basically in pattern 4, this thing was also a pattern 4. If we look at GBP JPY, I am talking about GBP JPY. If we look at hourly time frame, previous Fridays we dropped a lot. On Mondays we moved up, but if we look at overall picture of this trend, we are moving down. And if we look at M15, and if we go back to, so this was our pattern 4. We could have entered short anywhere around here by placing our stops and let it run. But at that time I wasn't aware of anything, and for 5th of July I have written on my trading journal that I waited for almost 6 long hours in front of chart. Although I have developed pattern 4, but I was unable to trade on 5th of July, so it was a no trade day for me. On 6th of July, I have taken a trade in GBP JPY. This was based on pattern 1. If we look at, we were forming this zone at that point, and we have an other zone at this point. So basically market faked below this area. There was volume, and I executed buys at this point, and my whole anticipation is that we can potentially keep pushing up till almost 44 pips area. But the whole problem in this trade was that we have already moved around 100 pips up at this point. So in M15 this pattern was invalid, But if we look at in M30, if I would have entered on next candle by placing my stops around 25 pips, I could have captured this move. So basically I was unaware of the fact that pattern one also appears on higher time frames, and if we sort of moved like 100 pips from the low, so it is better, always better to execute a trade on higher time frame, probably M30. So basically I executed this trade. I lost around $7 on this trade, and so this was an excellent trade as per pattern one at that point, as I wasn't aware of the fact that I need to move to a higher time frame. So although I was concerned, a little bit concerned that we have 100 moved around 100 pips, so what's the probability we will keep pushing up? But I still executed this trade because this trade was as per my pattern. I initially risked around $15 on this trade, and I was able to manage my trade and cut the whole trade in around 7 US dollar. So at night when I go to my bed, I thought about this pattern, and it came to my mind that I need to shift to higher time frame whenever we have moved a lot from the lows. So this was the mistake I was doing in this trade. So I lost around 6.7 US dollar, I would say, on this trade. But making money or losing money is not the point. The whole point is to execute excellent trade systems. If we look at gold, our pattern 4 appeared on 6th of July also. But the whole reason why I avoided this trade, because I was anticipating this pattern should fake out above this area, then I would have entered short. But the whole idea is that we have, let me draw this zone. I was anticipating if we fake out above 1772, then I will enter short. But the whole idea behind this pattern 4 is that basically we have moved around 80 pips from the low, plus we are creating a VIX at very high volume time. If there is volume in the market and prices are ranging, and prices have thrown some wicks to the area above, then there is high probability we are moving down. If prices is reluctant to move up on a high volume time, then where is gonna prices go? It will go at in opposite direction, of course. So this was our pattern 4. I executed this trade, placed my stops around 26 pip, as it was I have as I have very little experience with pattern 4, so I sort of executed this trade on smaller lot. But I have now decided that I will execute a trade only on my patterns, and I will not execute a smaller trade on my real account. So this was the trade. If I would have entered, I could have easily captured around 50-60 pips from this trade, but that's not the point. I stayed away from this trade because I am very picky now in picking my trades. So that's the whole reason for avoiding this trade. I would still avoid this trade because depending on the circumstances, this is what I have seen. And yes, so if we look at 7th of July in GBP/JPY, let's look at 7th of July. So basically we have created zone at 162.500 and 161.800 at that time. If you can easily go back and look at my live streams, and I do look at my live streams because that's the whole point I have started my live streams. So as this candle has closed above all this area, I was anticipating, man, we are going up. I avoided this trade because this trade is not what I was looking for. Although we have done a fake out below this area and this could be a pattern one, but another requirement of pattern one is that if we break above on this candle, then I might have entered, but we have consolidated for so long. So in my opinion, pattern 1 at that point was invalid, and it is invalid at that time. Although prices, there was a sort of 50-50 chances that prices can move up or down, but I am not concerned about that. So I just avoided this trade. And later on the day, I was anticipating, let me look at 15-minute time. Yeah, I was anticipating buys above 162.730 area. I even placed my buy stop above this area, but at that time market decided that it will go lower. It went around 50 pips lower, and then came up. I again placed my buy stop above this wick because market created wick first on this candle. Placed my buy stop around this area. Market just decided at that time that we are not interested in buying, in going into buys at that particular time. So that's okay sort of thing, but I was anticipating buys in GBP JPY. It too went in buys, but our pattern was now invalid, so I didn't execute it on this trade. But if we look at gold, in gold, I basically I have basically taken a trade on 7th of July. So let me explain how I was able to enter on this trade. So at that time we have this area as a zone and another area around here. Let me draw that. So prices were consolidating previous in previous 2 days. We have a massive move down, around 300 pips of move on each day, so it do make sense on Thursdays that we are consolidating. But I was waiting for my trade. My trade appeared, I executed it and made profits. So but this was only a small win. I still consider that this week was my break-even week, and I didn't, but and I still believe that as per my patterns, there was random probability of break-even trades, big win trades, and small win trades. So I haven't seen big win trades as per my trading patterns so far. So I am waiting for those trades. Those trades can appear at any time. The only good thing I have done is manage my stops, and this trade was initially 15 US dollar risk. I was able to manage and cut this trade in 7 US dollar loss. If let's say this example trade went in profits, and even if I would have able to capture like 20-25 pips, this trade will be in $25 profit. So that's the whole thing I'm trying to do, like minimizing my losses and letting the whole trade run when it goes in my profit. So I executed on this trade, placed my buy stops around here around 25 pips. I was anticipating prices to go in profits around 1747, around 35 pips, and I entered this trade. I sort of have taken some profits at 20 pips. I closed 50% of trade. Prices go against me. It hit my entry point. I cut another 50% of trade, and next candles again touch my entry point. I again cut 50%, and then my small runner, it was very small. It hit around 34 pips. But let's suppose if this volume appears in previous candle, I would have easily captured around 30-40 US dollar in this trade. But always remember, whenever I sort of calculate money on trades, it means that there will be times when market will go in buys on same candle, then imagine that trades will put me in massive profits. So whole idea behind trading is to minimize losses and let the whole trades run whenever they are in profit. So basically I still consider this trade as a break-even trade, but that is it. But after this trading day was over, I felt like I have my emotions that are now accumulated into me, that I have spent so much time for past 4 days, almost 7 days, 7 hours on average each day for previous 4 days, yet I was unable to make any big profits so far. So on my trading journal, I have written a detailed performance of how I am performing, and at that point I feel like I have now developed a skill of patience. I wait for my trading patterns to appear for so long that I basically at this point adjusted my trading plan, and I have now given myself a permission to execute 2 trades a day. I can now execute 2 trades a day. These 2 trades can be profit or can be loss. I am okay with both the outcomes, but the only condition is that these 2 trade patterns must be based on your trading patterns. But outside of your trading patterns, you are not allowed to trade. So that's the whole thing I have written on my trading journal. Plus, there was a lot of pressure from my friends and family. So I have tried to address my that problem and my those accumulated emotions as well. And like if I will try to progress a lot on few trading days, it will just ruin the progress that I have made in previous 7 months. So it's no use to rush the procedure. And even now I have sort of started to enjoy the procedure. I spent like 8 hours in front of screen, and still I get like no trades for some days, but I am okay with that, and I sort of more happy because I am following my trading plan. So let's move on to Friday. On Friday we don't have any trades. Let's look at Fridays. Although so these were the zones I have drawn on Fridays. This was NFP candle. This NFP candle basically fake spike up because this spike only appeared on my broker, but it did not appear on others broker. Some people have captured like 17 18 pips by placing buy stop sell stops on this trade, but I am not allowed to trade news candle. That's what my trading plan says, so I stayed away from this trade. So basically we faked below 1733 area, and then we were trying to break above the zone. I placed my buy stops here, but at that point market decided we are not going up. We at that particular point of in time, but later they move up, and at this point outside of New York Session live stream, I was anticipating we can now move up, and I maybe executed this trade, but the whole problem is this was 30-minute candle start, second half of 1 hour candle, and it has no wick to the low side. If only it has a wick to the downside, I may have executed this trade, and it went in straight 70 pips profit with minor to no retracements. So at this point, if I was in this trade, I am pretty sure I could have captured this whole move on a big lot, on my whole lot. But that's not the point. There were two reasons to avoid this trade. Number one, I felt like I have accumulated emotions from previous day that I have waited for so long, and yet I was able to close the week in break even. So I feel like it is now an emotional trade. So this was my reason number one to avoid the trade. And second reason was it has no wick to the bottom side. And third reason was it was not a picture perfect pattern one. And it is basically a big variation in pattern one that I am basically not familiar with. That's the whole reasons to avoid this trade. However, in GBP JPY, if we look at here, I placed my buy stops above this candle wick at this point, but at this particular point in time, market decided we are not moving up, and I am okay with that. I deleted my buy stops and move on with my day. Later at that point, it tried to move up. It went into buys, but that's not the point. It is not a valid pattern one at this point now. So I stayed away from this trade. However, a valid trade appear based on pattern 4 right over here. This was my entry. After the close of this candle, I could have entered right here, place my buy stops around 24 pips. I could have captured, and my take profit was this wick to the high of this wick, so around 45 pips. I demo executed this trade because I don't have enough experience with pattern 4. So yeah, that's it. So on my trading journal I have written that markets, there are different phases of market, and I am basically aware of few of those phases at this point. So basically in my pattern 4, that I am basically impressed with with the amount of patience I am showing, and it basically addresses that you are doing pretty well based on your frustration. You are addressing your emotional issues like anger, frustration, revenge trading, emotional trading, and this is a pretty good thing at that point. So yeah, I have missed a lot in this week, and plus on this week my trades, big trades based on my trading patterns that didn't appeared. I hope so those trade will appear on next week, and I may be able to execute big profits at that time. So if I look at my trading history starting from this month, starting from Friday this month, I am basically 20 US dollar profit, although it's a small amount, but that's not the point. My whole target in this break even phase, I am basically a break even trader for now, is to gain like 4 to 5% a month for next 6 months. So I'm basically up 2% in profits at this point. So it's a big thing because I am managing my stops. I only traded one, two, and three trades in 6 trading days. So this is also a big thing because these were small trades, and I have now decided that I will not take small lot trades on my real account. If I am to take a trade, I will either go with full risk, or I am not going to take a trade at all. So let's look at our trade journal. So basically in past three, yeah, in a weekend I have extracted some pattern 3 examples. So I will take a quick look at them, and then we will turn off this. So this was based on pattern 3. Basically we moved up, consolidated, and moved up a higher time frame. Basically in this pattern 4 we usually do fake out below H4 support and H4 resistance, and I entered short at this point, and but I got stopped out. I managed my risk, and yeah, I I again entered when this candle closed bearish. I gave my trade a second chance, and that didn't work out, and I sort of closed this trade in very little drawdown. I will show you my history later on. And if I look at pattern 1 examples, so this was based on our pattern 1. We basically faked up above the zone, and when this candle start to break below the zone, I executed this shorts. My initial stops was above this candle wick. When the prices went in profits, I sort of closed my move my stops, and this trade was around, I would say, 1.5% by risking 1% on my account. So if I look at pattern 2, there are some example of pattern 2. In pattern 2, the here, if I go into here, we were moving down. We basically tested a resistance. We again tested it, and then faked above this resistance. So this is the whole idea behind pattern 2. I executed this trade, and it went in profits. It is around 1.8% up on this trade executing by taking a risk of 1%. So basically I have done a 1 month of simulation also. If I look at the result of those simulations starting from 9th of January, uh, from 11th of January, I basically waited for 6 days to execute these trades. These are around 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 trades, but but the partial close also appear in these trades. So basically executed a buy position in gold, made 1% of account, and call it a day on 5th of July. So the 5th of July was previous day. Previous was taken in previous simulation. This week starts from 11th of January. On 11th, I executed 2 trades, and these first trade was around 2% profit. Second trade was 2% profit. All right, if you wait, I will start my simulation and I will show you how these trades were taken. And on 13th, I only there was no trading on 12th because I didn't find my trading patterns. On 13, I executed 1 trade, and it was 2% profit. And on 14, I executed 1 trade, it was 2% profit. And on 17, these are trade on 17. I basically took 2 trades on 17 and I closed them. That's why they are showing like 6 trades are taken on single day, but that's not the case. I have only taken 2 trades. One trade was closed in 400 loss. That was around minus 0.5%. So if I am winning a trade, I am getting like 1% of account minimum on average, and if I am losing a trade, I am losing around 0.5%, because initially I am executing ratio 1 risk reward trade, but I usually lowers my stop. That's why I lose less. So this was trade. On first trade I lost around $400, and second trade was also a loss. It went in 4-5 pips in profit before pushing against me, and yet I was able to close this trade in just $36 loss. Can you imagine how I am managing my risk? And on 18th I executed 1 trade, made around 1% profit. So this is what I would like to see on my real account. I want to same progress on my real account. So I will quickly go over those trades that I have taken, and we will end this stream. So starting from 11th of July, I will only look at M15. Starting from 11th of January. All right. So this was 11th of January. This trade was probably executed in M30 if I see, if I look at it on 11th of January. Yes. So basically this was our zone. This execution was based on pattern 1, price faked below, and basically started to break above the highs. I executed early, but I was aware that it was early trade, so this was my correct trade basically based on pattern 1, and I my stops was around 30 pips. Once candle started to break above, so you see I executed right over here when it starts to break the highs, and it was instant profit, no drawdown trade, around 70 pips in profits. 1 ratio, I would say initially it was 1 ratio 2 risk reward trade, but later on it became around 1 ratio 4 risk reward trade because of my risk management skill. So let's look at 12 January. We basically didn't have a trade, and if we look at 13th January, 13th January. So these were our zones. We faked below. There was anticipation. We will retest this area and continue moving down. But there is also an anticipation. We are dropping in higher time frame H4. Price faked up above this area and I executed short at this point. Placed my stops around 14 pips. Gained around around 25 pips. So if I look at here on 11th of January, I have taken 2 trades. The first trade was little bit risky. I was testing it, so if I exclude it, I only made around 3k on second trade. On 13th of January, I executed shorts and made 2k, 2% on my account. This was the trade, and taken 26. If I go next on 14th of January, this was our pattern 1, and I executed this trade, placed stops right over here, gained around 21 pips. My stops was 10 pips, and yeah, so this was also a 2k profit. At the end of this simulation, I will also show you how much I was able to make by risking 1%, and in just 10 trading days basically. So this was pattern 2, and this was our pattern 3 basically. It didn't play out as I wanted it to play out. Executed 2 trades. My initial risk was 2k, 2% of the account, but I was able to close these trades in just 400 US dollar loss, and that's only 0.4% of my account. And this trade second execution went in 10 pips profit, but once this candle starts to break, test the entry. It was once 1 minute move because I basically have watched this. So this trade was a little bit of loss, but this is the way things are. So all right, this was also a pattern 3. The same thing that appeared here appeared in opposite direction in buys, executed buys here, placed my stops around 13 pips below this previous week. It went in 15 pips profit. I closed my position and went on with my day. So if I now look at my progress, how much money I made or lost, let me calculate that percentage for you. And I want same exact pattern on that on my real account as well. If I look at it starting from 11th of January, this trade I will not consider it because it was taken out of my pattern. On next I made 3k, 2k, 2k, almost 7k, 6.5k, and 7.3k. In I would say I have just made 7% starting from 11th of January to 18th of January. You see, in just 1 week I have made 7%. If I look back on previous simulation that I have explained, starting from 8th of the 8th of December, yeah, from here 8th of December to 5th of January, I made 7%, and in just week I just made 7%. You see, because in these 3 weeks I made 7%, and in just 1 week I made 7%. Why? Because those that trading weeks were slow because we were heading into weekend and New Year holiday and Christmas holiday. That's why these three trading weeks were slow, and this trading week was we have pretty good volume, so we were able to create 7% in one trading week. So that's all for today, and I hope you have enjoyed this live stream, and I will also